Tutorial 1. Still continuation of accounting cycle. This is our lesson number 10, the trial balance. Remember, this is with Dr. Geoffrey Mbova of accountingnest.com. Most welcome. Now, the first question that we need to ask ourselves is, what is a trial balance? Now, a trial balance is a financial statement which depicts or which displays a summary of debit and credit balances or totals for all accounts at the end of the financial period, usually a year. Now, the next question that we need to ask ourselves is, what about a trial balance format? And how is it prepared? Now, a trial balance format is a design or shape the TB statement assumes where all debit and credit balances are recorded to test whether there was any errors during business transaction entries in the different ledger accounts. Alright? So, a trial balance format is made up of three main components, that is, three columns, namely the particulars column, the debit column, and the credit column. So, in a nutshell, a trial balance is prepared as follows. We have got the title, which is made up of first, the name of the company or the organization who owns the trial balance. Then in row 2, we have got the title of the statement that is being prepared, because there are several financial statements that an organization prepares at the end of the financial period. In this case here, we are talking of the title of the statement is a trial balance. Then the third row is for recording the time duration within which the information carried by this trial balance is represented. And the statement always starts with for the year ended. Like in our case here, we are talking about for the year ended 30th, the month and the year. Then the three columns are as follows. That is the particulars, the debit side, and the credit side. Whereby, with the 5 categories of ledger accounts, they are generally recorded as follows. Capital is credited, liabilities are credited, and also profit of the business is credited, while assets are debited, and operating income on the other hand is credited. But operating expenses are in debit entry. Now, if there are no errors, although I have some reservations to be disclosed in the future in an advanced tutorial, is that if the two sides of the trial balance balances, it is assumed that there were no arithmetic or accounting errors that were committed during the recording of business transactions in the respective ledger accounts. So a more detailed explanation or presentation of a trial balance is a case of accountingnest.com trial balance, whereby the name of the company is accountingnest.com and the name of the financial statement is a trial balance, and the time duration covered is for the year ended 30th, a certain month in the year 20, a certain period of time. whereby the three columns are with us there, and we can now record capital, liability, assets, operating income, and operating expenses. Now the corresponding entries will be: capital is a credit entry of 10,000. Liabilities again is a credit entry of 5,000. Then assets translates to 14,000 and debit entry, while operating income is 8,000. Then we also have got operating expenses, which is 11,000. Now with those entries, you realize that the two sides are not balancing. Why? It implies that at the end of the financial period, this business had made some profits. So the profit is a credit entry, which is of 2,000, which when added there makes now the two sides to balance at 25,000 US dollars. So those are the totals. I want to take another case whereby I want us to remember or recall the balances that we brought down and even the totals that we determined when we were preparing the respective ledger accounts as per the different natures of accounts. And you realize that in this case, if you look at a case like, for example, let's just take an example like your company limited trial balance for the year ended 31st 12 2021. If we borrow or we transfer the information that we had already established as far as the balances brought down in the 5 categories of ledger accounts and transfer the same to prepare a trial balance, then the following will be the outcome. That capital was of 10,000, if you can remember. Then bank loan was of 20,000. Then cash was amounting to 28,000. The entries are as indicated up there. Then we've got commission income received. It was of 5,000, you can remember very well. Then we had the electricity expense of 7,000. And with that, the totals translates to a clean 35,000 on both sides. This tells us that there was no accounting or arithmetic errors when those transactions were being made in the respective ledger accounts. And I want to remember this one thing, that the trial balance is our third step as far as accounting cycle is concerned. And it is a trial balance that demonstrates a summary of all the transactions which took place in the course of a financial period of a business. So with that summary, then, the trial balance will be the tool to be used to poke out information that is necessary to prepare the trading profit and loss account so that we can establish whether there was any profit made or the firm suffered a loss. So as we end this lesson, I want you to note the following, that the aim of any business promoter is actually to make profit. And this introduces us to our last lesson, that is lesson 11, about trading, profit and loss account. Thank you. Remember, our materials and notes are available in our website accountingnest.com. Thank you.